Okay, everybody, I'm going to stop for a moment and try not to freaking laugh. Why would I... Sorry. I have to laugh. Let me regroup for a moment because I do not like to redo these videos once I start. So let me just get my act together here. So first of all, yes, post-market wrap-up Thursday, July 7th, 2022. Why am I laughing? Why am I laughing? Because you see, yet again today, another miraculous, really nice market day. Yes, gains across the board. And if you were to turn on, especially CNBC, they're orgasmic over it. They're orgasmic over another rally on Wall Street. As a matter of fact, the S&P 500 is no longer in bear market territory. Oh yeah, and they're just getting off all over the place. It's perfect, beautiful. I guess everything is fine now. Oh, wait a minute. We did hear from a Fed president today. Fed President Waller. And Waller, are you ready? You might want to take a deep breath. Let's do it together. Ready? He says, U.S. economy is still strong, despite the fact that even today we got another round of bad economic news with first-time unemployment claims coming in worse than expected. Oh yeah, and our trade deficit also came in worse than expected. You can't make it up. We haven't had a single piece of good economic news, and they're even telling us that our economy, we're shrinking. The Federal Reserve's own projections with regard to GDP, or gross domestic product, is telling us it's going to be negative. Not just that, the Federal Reserve's own forward-looking economic indicators are all pointing down. Yeah, all of them, without exception. But Waller says the U.S. economy is still strong. It's really, really freaking strong. Make it up, people. Make any of this stuff up. And then we'll find out here. Major corporations around the world, not just here in the United States, are planning on layoffs moving forward because their economy is so strong. How about no? How about because their economy is dog shit, cat shit, and bird shit, all mixed together in a hot, steamy mess, and they're going to make you drink it. Make it up. Please, someone help me. Okay. So on top of a very nice rally on Wall Street, S&P 500 now out of bear market territory. Oh, looking beautiful. 10-year yield. Let's just look at the 10-year yield real quick. 3%, a shade above 3. All right, I'm not worried about this. Again, I've been explaining that with regard to the 10-year yield, it's not so much the number. It's the pace as to when we're going to get there. And in this environment, 3.2, 3.25 is probably where the 10-year yield should settle. But if we start moving higher above that, like we witnessed recently, bang, 3.5%, that's the market's not going to like it. But again, look, we have a very, very honestly a unique situation kind of going on here. We have central banks buying it all. We got the ECB, emergency monetary policy, Federal Reserve, unconventional. They can't say emergency, so they have to switch the word. It's not emergency monetary policy. Oh no. And don't you dare call it quantitative easing, because it's not. We're just buying it all. Oh yeah. And it's unconventional. That's the Federal Reserve's own word. And of course, the Fed does not. They don't buy stocks. Remember that. Ex-Fed President Waller, who says the U.S. economy is still strong here despite everything to the contrary. Remember what they're going to do. What are they going to do? They're going to try to convince you that everything that you're seeing is not real. And then the mainstream media, you know what they're going to do? They're going to tell you one thing today That's the absolute truth. But tomorrow or the next day, they're going to tell you something different, because you see, the truth that they were telling you that day was actually a lie. But the truth that they're telling you whenever they're going to tell you next, well, that was maybe the truth, but not so much anymore, because they're going to change it around again. Make it up. Make it up. I dare you to do that. So, again, we have at least the commentators on CNBC. They're all hot and bothered over the rallies in the market. Oh, yeah. Oh, and they're going crazy that we're now out of bear market territory with regard to the S&P. Everything is lovely. You're watching Bitcoin, 22,000, looking pretty lovely here. Let's see what happens there. Cryptos did well today. Gold and silver putting on slight gains. Dollar slightly weaker. Crude oil. Are you watching crude? Oh, yeah. Here we go again. Higher, like over 4%. Isn't it just beautiful? Look, I'm laughing. I really sometimes can't help myself. If I don't laugh, I guess maybe I'll scream, cry, I destroy my office. You know, there are times, I will admit this, where I kind of roll around the floor. I just roll around, kicking and screaming. And maybe you should get that on tape one time. And we'll put a video out. And I think that'll go over pretty damn freaking well. All right, look. So the story is what it is. We have a market that is, you see, let me set the stage for you. Between the European Central Bank and the Federal Reserve, their actions here with regard to trying to stabilize the debt market, still have a twisted yield curve. The real key here is they are desperate to send a signal to the market. Hey, don't worry, we got your back. I covered this recently, and the market's a little slow to learn. You know, I've been known to be a little slow to learn too, as of late. I'm talking about the plethora of mistakes that I have made this year, and they've been pretty freaking epic. I've admitted it freely here and in my newsletter. I just put out a newsletter about it recently as well. Yeah, I've gotten it wrong, but I'll tell you what I did do. I went all the way back to September of last year, and I went over all the data. I've been covering this pretty much every day in my spare time, for which I don't have any. But I know where I made some really big mistakes here, and I plan to learn from my mistakes. But look, any trader, anybody who's going to sit there and try to tell you, oh, I never make mistakes, I am the best, I never make a mistake, I'm perfect. You're looking into the face of a liar. This market does seem to get the best of all of us from time to time, and I don't care what fund you want to look at. Look at all of the major funds from the investment banks. They're all down. They're all down. So don't beat yourself up if you've been caught on the wrong side of this as well. But the story is very simple. The action of central banks right now, especially the ECB and the Fed, they're tag teaming this market, trying to send a glaring signal. Okay, get back into the market, because we are going to keep rates suppressed for as far as the eye can see, no matter how much cash it takes, no matter how much we need to inflate. Well, that's what we're going to do to make sure we keep the debt market stable. It's not going to work. In my view, honestly, this is yet a big Band-Aid, or maybe like a big fat bandage on the market, but it's massively inflationary. There's going to be a terrible price to pay for it, and all they're doing is fueling the debt bubble. They're making it worse and worse every single day. I think this is pretty evident, okay? But again, at least, but that doesn't mean, again, in the short run, that we can't see this market make a nice bounce, especially if the 10-year yield stays stable. Forget about inversions in the curve. Okay, a lot of people continue to write to me about it. Yes, I see the yield curve inversions. I see it. But what does it mean for you and I? Does it change our perspective? Looking at the yield curve, okay, looking at the inversions that are here, is it telling us something that we don't know? Do you not already understand that our economy is dog shit? That the global economy is in free fall? It has been for an extremely long period of time. But again, remember the S&P 500 is out of bear market territory now. Oh. But the Fed don't buy the market. Just keep that in the back of your mind. I think you're well aware of it. So that's the story, people. More layoffs are coming. Absolutely. There's all these major corporations warning about it. That's going to be lovely. And you're going to have, again, Fed President Waller, even when that happens, telling you how strong our economy is. Even though our economy is shrinking, that by their own projections, GDP is going negative, all their economic indicators are pointing down, but we're doing great. It's fantastic. Remember, they must convince you that what you see is not freaking real. I think I'm having a meltdown. I feel it. All right, look, I don't know what else to say here, people. Other than, look, we need each other more than ever. We're going to get through whatever they want to throw at us. It doesn't matter. It doesn't matter. We can see the bigger picture here. And the market is a twisted freak show of the highest possible order. And when you got central banks with unlimited firepower, okay, and they're willing to inflate because that's their end game, their goal. Central bank's goal is they have one goal, okay, collectively, and that is to continue to inflate, to continue to buy it all, okay? And once they own the entire world, they get to dictate all the rules. You understand? This is why I've been telling you for the longest time, forget about the puppet governments and retarded presidents and guys with bad hairdos. They don't matter, okay? It's the central banks. Once people realize that, I think, at least I would hope. Actually, it's too late. Now, the general population has been dumbed down to the point where people honestly cannot walk and chew gum at the same time. But that's the current state of affairs. This dependent slave society, and it's just going to get worse and worse. And they're going to create more reasons to do that. Stimulus checks, all that as well is another way to get people dependent on the system. Oh, look, the government really does care about me. They sent me this lovely check. I can prove it. Come on. It's pushing people down to the lower rung of society here, eliminating an entire class of people. It's an epic set of dynamics that are in play, but we cover this every day. And I'm happy to say, at least, that I believe we're way ahead of the curve when it comes to this. When it comes to the market, well, I've screwed up. Absolutely, I have. But I haven't always screwed up. That's the truth. A lot of you have been with me for a really, really long time. Some of my calls have been pretty damn good. Some have been pretty damn bad too. Anyway, look, we're gonna make this all work, people. We got each other, and that's the most important thing. And I'm gonna let you all go now. And maybe I'll go roll around my floor. What do you think? I think I'm due. I'll see you all in the morning. Please share the video. Please comment. Love all you guys and girls, and I mean that from the heart. See you tomorrow.